Okay, let's move on to insurance, the topic of insurance. I was thinking of the questions that I want to ask you. Then I thought, insurance, how does it work? In principle, insurances, like you pay a premium and then it covers. How does the money works? So let's say I pay a premium, it gives the company the money, but how does the company manage the money? And how does it pay out the premium to if in case really things really go wrong? How does the insurance pay out?
Okay. Basically, insurance is just risk is a form of risk management, right?
Okay.
Some people also see it as an investment, depends on them. But in general, how it works is just something happens to you, I pay you a lot of money. That's all.
Okay.
So it's like giving you a check, you can decide how much you want if that something really happens to you. So
Mm.
today you deem if this thing happens, you want $1 million, then you write it down.
Mm.
Then obviously you have to pay
Because
premium lah.
I think that is what everyone sees. I
Yep.
think what I'm curious about is what goes behind the scenes. So let's say ABC, the person A, B, C, D, E, F, they all pay their premium insurance into one lump sum where everyone pays inside to
Mm.
provide for the insurance.
Mm.
What happens if a lot of people suddenly say, I don't know, I died of suicide, and then there's a lot of claimants. A
Okay.
lot of people want to claim ABC all the way to Z.
Okay.
What happens after that?
Okay. I think in the insurance industry, right,
Mm,
there's this thing. I mean, insurance companies in Singapore and financial institutions, they are regulated by MAS.
mm,
Okay, so with MAS regulations, obviously it's very, 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 very stringent, right? They
mm,
will want to protect all the policy holders or their financial clients, right? So I believe there is this thing called the okay, I forgot what is it called, but there's this thing that a regulation there whereby insurance companies, MS will make insurance companies to maintain a certain level of liquid funds,
mm,
and it's quite extreme. So like for example,
mm,
the level is like if every like what you say, if everyone today, let's say they want to surrender their life policies,
mm,
then they want to pay out or like we have people dying or whatnot crisis, uh, disease or whatever, then everyone wants to
mm,
pay out. The amount of money they have to pay out the insurance company is actually the
mm,
liquid cash that they must maintain. So there is a ratio
mm.
one.
Okay.
So the more clients you have, obviously the more liquidity you need to maintain because their policies accumulate,
Mm,
right? So they will have that liquidity, which I'm pretty sure is also why people trust insurance because we have MAS, this kind of MAS regulation which assures them more lah.
mm.
So on the contrary, right, for your info, I think there's this thing. I don't know if you know. People think bank now is a very safe place to put their money. But I beg to differ because bank, how much they guarantee you if they go bankrupt.
I think a few percent only, right? If not, no, I don't think it's 50%. No, definitely not that high. Bit less than 10, is it ish?
It's only capped
Or
at
not even?
75K. The general there are
So, say again.
75K.
So, give an example.
So like there are some percentages but I think the cap is, if I'm not wrong, is $75,000 only. Let's say you got
So,
one, if you got 1 million in your savings account today, your fixed D account
mm,
today, then this
mhm,
bank, let's say HSBC
bankrupt.
bankrupt, you got
Yep.
1 million in the bank, but you are only promised 75K,
Okay.
which okay, people think is very safe, then that's the actual fact lah. So think again, as compared to insurance companies whereby their liquidity is definitely on par with whatever you have in terms of policy cash value.
Oh, is it?
Yes, they have to maintain very high liquidity. In fact, the last I checked, I think 1.5 years ago, we did a like a mini research lah. In fact, all the insurance companies, right, even the not so popular ones, they maintain way above the required liquidity ratio by MAS. So let's say,
Okay.
I don't remember the amount, let's say if it's 100%, they actually maintain like what, 120%, 150%.
Mm.
So it's very, I would say it gives an assurance lah. It's definitely safer also.
I see. Wait, correct me if I'm wrong. So are you saying I'm not sure if the regulations, the liquidity regulation for insurance and banks, is it the same?
I mean, they are both governed by MAS, but they probably
But
have
the
different regulators. For example, like bank, they have I forgot what's the bank one really. But insurance is also have we have LIA ma, the Life Insurance
mm,
Association, that kind of thing.
mm,
Many different regulations lah. But all I can say, if you're under MAS, it's just very stringent, no? Because they wouldn't allow any gray areas one to happen.
okay,
Actually,
yeah.
it also have, I think, this thing called the PPF, which is the Policy Owners Protection Fund Scheme, also required
Mm,
by MAS. So it's like this thing whereby they provide guaranteed benefits of your life policy, your endowment policy, your annuity policy. Even if the insurance company go bankrupt, they will assure you the cash value.
oh,
Yeah.
okay,
I think up to a certain
okay.
limit, which I think is very high one. Definitely more than a bank 75K lah. So